On Ohio, I know you could still expand your Ohio cultivation facility if you wanted to. I think square footage could double there. So I'm just wondering how immediate is that strategy within the context of your yield improvements? When could expanding that facility make sense?
It's going to be dictated by the market and what the demand is. So we run everything based upon demand. We don't really speculate a lot as far as what we build on cultivation. We look at what our demand is and what the demand would be on the next stores, and never really want to be dependent 100% or 50% on a wholesale market. So that's part of just our overall capital approach and operational approach. So as far as Ohio expansion, we want capacity to be able to expand, but we want to be able to expand based upon a stepped, not necessarily an all-in approach.
Yeah, I really appreciate that. I think the narrative over the last decade has been a narrative of overbuilding, and now everybody's stuck with a lot of capacity, and that's obviously going to force price compression. And I would assume that maybe nobody knows that better than a Arizona market leader, where that wholesale market has absolutely destroyed itself, and you actually have this massive opportunity to begin sourcing from that oversupplied market at much lower prices than able to be supplied internally. So I'm assuming you see the same thing going forward into Ohio, maybe at just a different rate, but is it fair to assume that you see the narrative continuing?
Yeah, what I always tell people on this topic, Josh, and have for years in the cannabis space is I grew up and spent a lot of my youth in central Illinois and the agricultural parts of the country, and at one time worked at Land O'Lakes and had some exposure to that egg business. What I always noticed as a kid was whatever was full in the silos was the hot crop from like 2 years ago. And it was very difficult to time that. And the federal government has floors where they support those types of issues and those types of commodities. You don't have that in cannabis. So what happens is the states expand, or somebody sees a new opportunity, they start to cultivate. And depending on where they're at, if you can do greenhouse, you try to get your costs lower than somebody else, et cetera, and work on your cost structure, assuming everybody else is going to go away and that the market's going to normalize and be rational. That takes a while and takes time. So when we did cultivation, we've always built it what I consider to be on a conservative approach of knowing that those commodities might at some point in time outrun the demand. And if that happens, then you've got a market that's compressed and falling, and your only hope for that market to balance and to be a survivor when it balances is to have your cost structure so low that you can compete in that environment. And that's what we've done. And that's why we did the strategy the way we have.
Yes, the why I call you the Charlie Munger of cannabis is because where I've seen a lot of operators over the last decade be very optimistic and building for abundance. I really do appreciate the pragmatic view of your end, obviously informed, like you said, by your past, by your history. Overbuilding, overspending, everybody was optimistic to do it. You're the one operator who's been telling us for years, no, that's not where the value lies. That's not where the opportunity is from an ROI point of view. So I appreciate it.
You participate, our philosophy has always been you participate in a market, you're not going to set it. It's very difficult to set a market. And when it's a commodity, it starts to balance itself out and everything. Despite how much people want to believe that they're going to create demand or they're going to market and create demand and stuff along those lines. Cannabis has been around for thousands of years, and there's a natural demand out there. And we recognized that and knew we weren't going to create demand. We needed to convert it and we needed to merchandise. And that's really been what we've done, is focus on how do we get somebody to want to buy from us versus somebody else. And if you're selling a commodity, you're going to have to do that on price, which means you're going to have a cost advantage and service on top of it. Quality becomes like a given and defined by that person who's buying it. They set what they consider to be the quality and where they're going to price it and where they're going to buy it. So we recognize that. Despite how much I'd love to be in a business sometime in my career, Where that didn't matter, I've never had that fortunate thing. I've never been Google or any of that. I've always sold a commodity product.
No, absolutely. And it goes to show that there's a lot of parallels between cannabis and some other sectors, and still very surprising that those narratives aren't necessarily drawn in parallel, which has always been
Well, I
frustrating
think
on
it's
our end.
because of the regulation. People want to convince themselves that
Yeah.
because this one's highly regulated, that it's going to behave differently and the consumer is going to behave differently and stuff like that. The only thing is some of our competitors that we're competing against are, illegal. They aren't authorized to sell it. So you're dealing with that aspect of it, more of the black market issue.